Welcome aboard the Bitcoin Express. My name is Chase. Let's get to it. The IRS has a new tax form out and wants to know about your cryptocurrency. So this is different because here they don't want to know whether you made money or you lost money. They just want to simply know, did you have anything to do with cryptocurrency in 2019? I have a copy of the new form right here. And at the top, it mentions, at any time during 2019, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? And it's a simple yes or no. And it's up to you at your own risk whether you want to check off no or whether you want to check off yes. And back to the article, it also mentions that earlier this year, the IRS sent letters to taxpayers who've made virtual currency transactions, telling them to pay back taxes and file amended returns. So many people think that I bought cryptocurrency, I sold cryptocurrency, it's fine, they'll never find out anyway. But as we can see, this past year, pursuant to a November 2017 court order obtained by the IRS, Coinbase, a very popular exchange, will turn over taxpayer IDs, names, birth dates, addresses, and transaction records for customers who conducted transactions worth more than $20,000 on its platform between 2013 and 2015. And this ended up happening, and many people over this past summer of 2019, they received letters in the mail threatening them to pay the tax or go to jail or pay heavy, heavy fines. And a lot of people ended up paying the taxes and filing an amended tax. Let's say you owed taxes back from 2017 or 2018. It's not so simple. So you most likely will have to hire a professional, an accountant, or a CPA. And then back to the article, it mentions on its third bullet point to keep track of your transactions and your cost basis. We know that this is nearly impossible, especially if you are a trader. How are you supposed to keep track of the dates, the times, what price you bought it, what price you sold it at? It's nearly impossible. It's even very difficult for someone that is not a trader. Even a long-term holder will have difficulty trying to figure this out. Luckily, there are websites such as cryptotrader.tax, which does it for you. And it's very simple. You just go into any of your exchanges such as Coinbase, Binance, Gemini, or Kraken, and so on. You download a file, you upload it, and it does all the work for you. Now, if you were thinking about filing your taxes, I do recommend cryptotrader.tax. Another one that's helpful you can use is bitcoin.tax. That one will work as well. So if you were thinking you can get away with not paying taxes, you might. People get away all the time without paying taxes. But the problem is, if you do get caught, the penalties will be so severe. It's very hard to get around it because when you buy cryptocurrency from an exchange, they have all your information. Even if you buy it from the exchange, send it to a new wallet, they're able to track it. The IRS is able to look at everything going on the blockchain, especially with Bitcoin. And even if a friend of yours bought it from their account and send it to you, it's still able to be tracked. One way, though, that it is difficult to track Bitcoin is if you buy it from a crypto ATM using cash. Of course, if you use a credit card or a debit card, your information will show that you purchased that cryptocurrency. But if you use cash, it spits out a paper with the private key and the cryptocurrency, and then you can use that to send it to a private wallet, and then it's not trackable. So again, this new tax form is not asking if you had capital gains or capital losses. It's simply asking pretty much, did you have anything to do with cryptocurrency? Now, if you were curious what is taxable when it comes to cryptocurrency in the United States, I have a list here from Coinbase. So of course, selling crypto for cash, buy Bitcoin, it goes up $1,000 and you sell it, you need to pay tax on that $1,000. Another surprising one most people don't know about is paying for goods or service. So if you buy a Bitcoin and it goes up by $1,000 and then you take that and buy something, you need to pay tax on the gain. And this is kind of crazy. This is really preventing people from using cryptocurrency in America to buy products. I'm not sure what the reasoning is behind this is from the IRS. Maybe they don't want cryptocurrency to take off, or maybe they want to have full control over it before it takes off. Then, of course, another one that surprised many traders is buying one crypto with another crypto. So if you have Bitcoin and then you traded it for Ethereum, that counts as a transaction. So if you bought the Bitcoin and its price went up and then you bought Ethereum, you owe a tax. But on the other side, if you bought Bitcoin and it went down and then you traded it for Ethereum, you can actually have a tax write-off. That would be a capital loss. Also, just mining cryptocurrency. A miner mines a Bitcoin that's worth, let's say, $10,000, and let's say that miner is in a 30% tax bracket. As soon as they mine that cryptocurrency, they need to pay about $3,000 in tax. And then also being paid in crypto. So if you have a job and someone pays you in cryptocurrency, they view it the same as being paid in cash. Just like you pay taxes every year from your job or your work, you would pay tax on the cryptocurrency. Now, what's not taxable? So these are things not taxable as of now in the United States when it comes to crypto. So donating crypto to a qualified tax-exempt charity or nonprofit, buying crypto with cash, and simply holding it. So this means that you're not doing anything with it. You buy it and you don't sell it, you don't trade it, nothing. And then also if you just want to send it from one exchange to another, that's also not taxable. But back to the new IRS form, these things are still reportable because the IRS form asked, did you acquire it? Did you receive it? So pretty much anyone that ever owned cryptocurrency, especially in 2019, they'll have to check off this box, yes. And if you don't want to, again, that's at your own risk. Now, America is not the only country coming down hard on cryptocurrency taxes. Also South Korea. And let me just get this straight for you. America and South Korea are not anti-crypto. If anything, they're more on the friendly side when it comes to cryptocurrency. But as we can see, they want to collect taxes from it. So the South Korean government wants to start taxing residents' cryptocurrency-related profits. The country's Ministry of Economy and Finance is pushing for the measures to be implemented next year. Local news outlet The Korea Times reported Sunday, citing government sources. So these countries want to collect crypto taxes, but if anything, this just solidifies cryptocurrency as a legitimate product. Because of course, as we know, you don't tax illegal things. And if a country has two choices here, they could either, they can accept it, they can embrace it, and they can benefit as well, they can collect the taxes, or they can go for an all outright ban. And that's something that we have been seeing with India. So India's central bank hints that cryptocurrencies will be banned. This is something that has been going on for quite some time now, and it looks like they're really moving forward to get the job done. So the governor of India's central bank, Shaktikanta Das, has restated that the Indian government is against private cryptocurrencies. This all comes ironically amid talks of India launching its own central bank digital currency. So this article mentions that it's ironic. I don't think it's ironic at all because there is no relation between a private cryptocurrency and a central bank digital currency. Notice the difference in words. One is a cryptocurrency and one is a digital currency. All a central bank digital currency is fiat money, the same fiat money that they're using right now in a different form. It's not a cryptocurrency at all. So there are countries that are anti-crypto. So not only India, we also know that China is against private cryptocurrencies. They as well would like to create their own central bank digital currency. And then we have countries that are more friendly. Over here, I have a list of the most friendly countries. This is something to think about if you're listening and you hold a lot of cryptocurrency, or if you're a business or you're thinking about starting a business in blockchain and cryptocurrency. These are some countries you might want to consider moving to. These are 7 countries where cryptocurrency investments are not taxed or have very favorable tax. So I'll just go through this list and I'll leave a description in the link below if you want to read more about it. So we have Germany, we have Singapore, we have Portugal, we have Malta, Malaysia, Belarus, and Switzerland. So I'll leave a link in the description below if you want to look more into that. Anyone listening to this in America first thing that might come to your head, especially if you are involved in cryptocurrency or hold a lot of cryptocurrency, is I don't want to move out of the country. I want to stay in America. I want to stay near my friends. I want to stay near my family. Well, you can still benefit if you know the right way to, I guess, not get around tax, but just understand which states have the best tax benefits. So of course we know there are some states where the taxes are just outrageous. So California, Hawaii, New Jersey, New York. And then we have states with low income tax or either no income tax. And those include places such as Washington, Texas, Nevada, Florida, and Alaska. So I'm going to show you a real example of the difference these taxes on capital gains can make depending on what state you're living in. So let's go through this first example. Let's say you buy one Bitcoin today for about $7,500 at the making of this video, and you live in San Francisco. Your income is $80,000. For all these examples for each state, we're going to use $80,000 as the placeholder example for income. So if you buy that Bitcoin for $7,500 and you hold it for more than a year and it goes to $50,000, the tax you will pay, the capital gains tax in San Francisco, is $10,328. Now let's look at the same example in New York. Again, it's the same thing. You bought one Bitcoin for about $7,500, hold it more than a year, goes to $50,000, same income of $80,000, tax, capital gains tax of $10,789. Now we're going to do the same thing in a state like Florida that has no income tax. Same thing. One Bitcoin around $7,500, value goes to $50,000 over a year. You're not even close to that range of $10,000. Your total capital gains tax will be $6,375. Now the examples we used, they're on a small scale. There's many people out there that hold hundreds of thousands, even millions of dollars of worth of cryptocurrency, but we don't even have to go that far. We can use an average, even an average guy, maybe someone even listening to this YouTube video today. Let's say you hold, 3, 4, 5, or 6 Bitcoin. That's totally possible. Let's see the difference it makes. So let's say today you bought 4 Bitcoin at the price of about $7,500, and this is very possible. This could happen. A lot of people are able to afford this. You hold it for more than a year, and the price goes to $50,000. So now you have the total gain from $30,000 invested, and now you have $200,000. So in New York, you're going to pay taxes of $45,195. Okay, that's a lot. Now we're going to take the same exact example in Florida. You bought 4 Bitcoin at $7,500. That's $30,000, and the price goes up to $50,000. So your total sale value is $200,000. So in New York, where you would pay $45,195, look what you would pay in Florida, $27,400. That's nearly half of the tax. So now just imagine doing this on a larger scale. We know there are a lot of people out there holding millions of dollars worth of cryptocurrency. So they can end up paying almost 50% less in tax. So just something to think about. We're still very early in the cryptocurrency game, but it's a wise decision to start thinking about mapping out your plan. So when the new letters come out this year from the IRS, it's simply going to, pretty much just to keep it simple, do you have anything to do with cryptocurrency? It's a yes or a no. If you ever received it, sent it, bought it, you're going to have to check off yes. And again, I am not a tax expert. I'm not a financial expert at either. So for any questions that you have for your personal situation, speak to a lawyer, speak to a CPA. And I do think that this type of information is so important for cryptocurrency investors, and it's something that they don't really pay attention to. They just pay attention to the price going up and down, but they don't think about the other half of the battle of investments, not just cryptocurrency investments, anything such as real estate, gold, oil, business. Taxes is 50% of the battle, but people don't pay attention to it. So I hope that you listening start paying attention to taxes in any sort of investment that you make. I hope that you found value in today's video, and if you did, please subscribe to the channel. I want to thank you for listening, and I'll see you next time.